Hello and welcome. You're watching special post-budget coverage on ICICIdirect platform. I have with me a very special guest, Mr. Prashant Jain, Executive Director and Chief Investment Officer, HDFC Mutual Fund. Very good afternoon, Mr. Jain, and welcome to the show.
Yes, Geetu, good afternoon. Pleasure. Thank you for inviting me to the show.
My pleasure, sir. Mr. Jain, markets are given a big thumbs up to the budget 21-22. Sensex and Nifty gaining over 6%. Now we have a statement from the rating agency S&P saying that it's an outstanding budget for growth. Has the budget met your expectations, and what is your view on the same?
I think, Geetu, the budget has met expectations of, most participants. And the best proof of that is how the markets have reacted. I think there has been a fundamental shift in this budget, and I think the focus clearly has shifted towards reviving capital spending and focus on infra. And I think that's a very good development because there are two ways of growing an economy. One is to create more investments, which creates jobs, gives rise to higher incomes, and then consumption eventually follows. Last couple of years, most of the growth in India has been supported by more income transfers, tax breaks, and also higher retail borrowing. There are limits to that mode of growth, and it is great that the government is now prioritizing capex. And I think this will put India on not just a sustainable but also a higher growth path. So to that extent, I think this budget meets my expectations, and I think of the market participants in general too.
Clearly, fiscal and policy support for investment-led growth. Do you think now is the time for private sector to come forward? Because growth plan has been laid down by the government. Government has done its job. Now, will the private investment start trickling in?
See, I think the environment is certainly a lot more conducive for private capex to revive. And if you are an entrepreneur, when will you invest in a new project? When you have confidence of demand and when you have visibility of profits. I think therefore higher growth is definitely, it gives more confidence to entrepreneurs. I also think interest rates are by and large quite low, even though there could be some upward pressure on interest rates. But to my mind, interest rates have a lesser bearing on capex than the visibility of demand and profits. And I think the visibility of growth and profits has certainly improved. And therefore, I do feel that private capex will also revive. But of course, capex these are things which take a bit of time. But I think the environment certainly is supportive of revival in private capex. And I think L&T chairman, who is an expert in this area, he has opined recently that he expects private capex to kick in within a year or so.
Net Asset Reconstruction Company and AMC will take over existing stressed assets. A bad bank sort of. It's surely going to take time for this to be in place. But how do you see this?
I think this is a step which is welcome. It is in the right direction, but I do feel that the corporate NPA cycle that we have witnessed over last several years actually is ending. And therefore, probably in the next cycle, this could play a more meaningful role. But I think for the foreseeable future, by the time this is put in place, I think and hope that most of the current and the recent NPAs should have been resolved under the alternate resolution mechanisms. But clearly, this is a step in the right direction.
Markets are up. Sensex has crossed 50,000 levels once again. Nifty has reclaimed around 14,500 points. Which sectors do you think would be benefited the most from the budget, post-budget now?
See, clearly, I think as the budget is supportive of more capital spending, sectors that benefit from that are banks because it means faster trade growth. Banks are also coming out of a corporate NPA cycle, which means good performance over next few years. And I think I have also seen that when there is good demand for money, there is possibility of some expansion in margins. So I think this budget is supportive of banks, especially those with a good liability franchise. I think the EPC companies, the engineering companies should also benefit because when you put up a new plant, these are companies that get more business. And eventually, if capex cycle revives, incomes and consumption also revives. But that will take some time to play out. So I think in the first phase, banks and engineering capex-driven companies stand to benefit more from this budget.
Scrappage policy has been outlined. How do you see this impacting the auto space?
I think the way the capex and the scrappage policy has come, I think it will have some impact, but I don't think we should expect too much from it, because if you look at the population of vehicles which are 15 years old is not very large, and that too is based on a test. So it would have some positive impact, but I don't think we should expect a lot from that in the way it has come out currently.
Privatization of 2 PSU banks and 1 general insurance company possible? And the completion has to be in FY22.
I think this is a very revolutionary step, because up till now using the word privatization was probably not as openly used, and I think this suggests a very clear and definitive shift on the part of the government, and I think this will be a small start, because it is, in my opinion, these will be probably smaller banks that will be privatized, but it should in future lead to more and larger outcomes. I think this is also a fundamental shift in the way government was reducing stakes up till now through ETFs and single company issuances. When you do a strategic sale, the stock does not come to the market. Rather, there is an open offer by the new strategic buyer. So to that extent, I think this revised strategy is supportive of better valuations in the PSU space.
If we talk about the revenue side of the budget, it looks a little difficult, because the kind of optimistic targets that have been laid down from the tax collections are on a higher side as compared to the nominal GDP growth of 14% that the budget is targeting. What do you have to say about that?
In fact, I would suggest that, or I feel that the revenue assumptions this time around are actually quite realistic. And in the past, we have seen more aggressive assumptions. And I think the buoyancy that has been assumed, or the tax growth ahead of the nominal GDP growth, I think is just about 2%, which I think is quite reasonable. And let us not forget that the base for the growth is the current year, which is a very subdued year. So the growth what we are seeing, if you see it over last year's base, I think it will appear to be a lot more reasonable. So I would not have too many concerns around that.
Thank you, Mr. Jain, for being with us. It was a pleasure speaking with you, sir.